In the morning session on Monday, the oil market was trading under pressure, yet the overall position of oil is quite strong. Last week, the quotes showed impressive growth and gained more than 2%. The last time oil was trading above $93 per barrel was in October of 2014. Investors' optimism is largely based on the OPEC Plus decision to keep the monthly output rate at the previously agreed levels. In addition, the factor of limited supply and rising demand supports the positive outlook for oil. Worries over existing geopolitical risks and the OPEC commitment to maintain current supply levels enabled traders to test 7-year highs on Friday. What's more, a winter blast in Texas stimulating demand for fuel was also in favor of oil. As a result of a rapid rise, oil quotes tested new local highs. At some point, the price touched the level of $94 per barrel. A correction is sure to come after such a quick jump. Oil bulls are now retreating from the mark of $93 per barrel, thus giving way to bears. Given the current pace of growth, the psychological level of $100 per barrel seems a very close target now. Moreover, rising geopolitical tensions in Eastern Europe made analysts revise their forecasts for oil. Thus, JP Morgan expects Brent to surge to $120 per barrel. Since the beginning of the year, oil has gained 20% in value, which means that traders will start taking profits sooner or later. This will result in a technical correction in the market. The ruble has notably strengthened against the US dollar. It continues to move higher on Monday. The rallying oil market had its positive effect on the ruble. Besides, it remains stable while the Central Bank of Russia holds its purchases of foreign currency. Yet there are currently no other strong drivers for the ruble. This may be a promising week for the Russian currency, given a strong oil market and an upcoming meeting of the central bank. Investors expect the regulator to raise the rate by at least 100 basis points and to maintain a hawkish stance at its next meetings. High inflation risks will force the central bank to act. The inflation outlook is likely to be revised upwards for the year-end. Today, the dollar-ruble pair looks oversold, but it is still moving downwards. The nearest support is found in the area between 75.80 and 76.80 rubles per dollar, where the quote is currently trading. Consolidation below the level of 75.50 will indicate a prolonged downtrend. Otherwise, the pair may get stuck in the sideways channel. As for gold, it shows no clear trend today. As we predicted earlier, the asset has entered a flat channel. Gold futures are struggling to develop a recovery after a recent drop, but so far all attempts have failed. At the beginning of the session, the price moved lower and then returned to the positive territory. The movement in both directions is very minor, so the quote is still hovering near the level of $1,800 per troy ounce. The resistance at $1,815 is a very strong level that bulls have failed to break through. If the price overcomes the obstacle at $1,817, it may then head further for $1,820 per ounce. Despite the lack of strong catalysts for growth, buyers of the precious metal are still determined to break through the key resistance levels. A steady consolidation above the area of 1,812–1,815 will serve as a buy signal. We hope that our review will help you choose the best strategy for successful trading. Have a great week ahead and see you back soon.